Last week was a week of the everything rally. We saw cryptocurrency Bitcoin reach an all-time high in its 15-year history, while gold prices extended their rallies to records too. Nasdaq and S&P 500 also soared to record highs as markets appeared unsinkable. What's driving this surge? And a bigger question is, will the bullish upward trend continue, or is it a bubble? For some clues, we've invited Professor Shin, economics professor at Sookmyung Women's University, joining us via Zoom. Good morning, and thank you for joining us.
Good morning.
Thank you very much for joining us, Professor Shin. I know it's the first time for you on Good Morning Seoul, but you're a familiar face on Arirang TV. Welcome.
Okay, yeah.
Now, Bitcoin broke the $69,000 mark last week, reaching an all-time high, only to be outdone this Monday, breaking the $76,000 mark for the very first time, while spot gold climbed as much as 1.3% to nearly $2,200 per ounce. What is behind this everything rally, Professor Shin?
Well, we have to remember that the Federal Reserve of the United States had been pouring astronomical money since the great, financial crisis in 2008 and 2009. In fact, the total number of cash has been sextuple since 2008. So first point that I want to mention is that there has been a huge supply of money since 2009. So liquidity is one of the factors that are driving everything rally. And the second thing, especially about Bitcoin, recently, this January, I think, Security Exchange Commission has allowed, Bitcoin to be sold in a regular market in terms of ETF, which is exchange traded fund. So with that kind of allowance by SEC, people expect that many investors are beginning to invest in spot Bitcoin. So I think those two forces, one in abundant liquidity on the one hand, and the other one I think is the SEC allowance of ETF for Bitcoin. I think that's our two factors that driving, especially the Bitcoin price up.
So when it comes to the world's biggest cryptocurrency, Bitcoin, it seems that most analysts aren't surprised by this rebound. Bitcoin has long risen and fallen in rather volatile cycles, but they're split about what this price surge means for the future. How high can it reach? How low can it go? What are your projections, given that Bitcoin's 4-year halving cycle is due to return come next month based on history?
Well, yeah, especially Bitcoin has been very volatile in their, price movements. And we had numerous, I think almost a dozen cases of bubble burst throughout the, 2010 and 2024. So you have to remember that when the Bitcoin prices are beginning to fall, it can go down 80%. 80%. I think that has happened in 2020 and 2021. So you have to remember that it can go up. Nobody knows, how far it could go up. But you also have to remember that it could go down 80% in less than a year. So I would say that it could go up. Now it is about $72,000. But it can go up 80,000 or even 90,000. But you have to remember that it could go down to probably 10,000 or 20,000. So all the investors in Bitcoin should remember that, past experiences have shown that prices could go down, dramatically in relatively short period of time.
That volatility speaks for itself. Like you've said, there's already been a risk of dozen bubble bursts. And that's in a rather short time frame if you think about it. A 15-year history is not that long. Now, what I think puzzles us a little bit more this time around is the fact that this sort of safe haven gold investments and its much more riskier companion Bitcoin have both climbed to fresh record highs in a parallel, it seems. Isn't this in itself a pretty rare phenomenon? And how would you explain this phenomenon?
Right. For the last, I think, 13 or 14 years since the Great Recession or after the Great Financial Crisis, 2008, you have to remember that the prices of stocks, especially the Nasdaq, has been, increasing substantially higher. And during last, I think, 3 years, the commodity prices like, crude oil or nickel or copper, their price has been, increased more than 100%. So in comparison with that, Nasdaq or commodities, the price of gold has been relatively stable. So I think this time, the liquidity is looking at some commodity that, whose prices has not been rising, very rapidly for the last, 10 or 15 years. So I think this is the time for liquidity to be invested in relatively quiet, commodities, that is gold. So I think there has been a room for further increase in the gold price. Probably now it is about, 2,100. I think it could go up to 2,500 or even more when you compare, to the prices of the Nasdaq or prices of nickel or copper for the last, I think, 3 years.
Okay, Professor Shin, what I'm wondering is, are there further grounded reasons for the rally? I know you mentioned a few, but some experts say that there are solid bases for the everything rally, while others worry that the bubble will burst maybe sooner than investors are ready for. So what is your take?
Well, that depends upon, how fast or how slow, the Federal Reserve will be cutting the rate. Everybody expected that, rate cut will be at least 3 times during this year and furthermore next year. But that kind of expectation has been dissatisfied because of the, the current kind of a position of Federal Reserve, especially Chairman Powell says that, he has not the confidence in, inflation. So as long as, inflation is not making him confident about rate cut, I think we have to wait a long time. So as long as, the delay of the rate cut is expected during this year, I think, rally could not be sustained. But one other thing is that everybody is thinking about the possible recession due to very high interest rates. So I think probably latter half of this year, recession will be rather mild. Recession will be coming, and if rather mild recession is coming latter half of this year, I think that everything really should stop. And we had expect that a lot of stock prices and commodities prices will be falling because that has been rising very rapidly for the last couple of years.
Speaking of what Fed Chair Jerome Powell had to say, he told House lawmakers that interest rate cuts are likely at some point within this year. Of course, the big question is when that is precisely. But what reasons did he actually provide for this kind of much awaited hint of a rate cut?
Because inflation, we've been having about 9% of CPI a couple of years ago. And it's been coming down very dramatically, but at about the 3.5%, the pace of lowering inflation has been very slow. And the last month, actually, some of the key indicators has risen a little bit. So everybody in the Federal Reserve do not have the confidence that their target, which is 2%, will not be achieved within this year. That's why, the Federal Reserve is expected to cut rate probably in the month of May or June, but they have to see, whether the inflation will go down below 2%. So that is the key factor that we have to look at in judging, future movements in interest rates.
Which brings us to our final question, because the gap between South Korea and U.S. interest rates, that's also one of the biggest talking points and something that BOK is very wary of. While Korea-U.S. interest rate reversal remains wide at 2 percentage points, how would the U.S. Fed's rate cut indication impact the BOK's future rate settings? And what are some of the primary factors that BOK has to consider at this point in time?
Well, 2 percentage point gap between the U.S. and Korea, that has unprecedented. It has been unprecedented for the last 50 years of Korean monetary policy. So we know that Korean interest rate is very low, about 2 percentage points lower than the United States. And the reason that the Bank of Korea has to keep the rate lower than the United States is because, as you know, Korean economy is suffering from, lack of, domestic demand on the one hand, and the other factor is that so many people are burdened by higher interest rate payments on their the past loans. So for the Bank of Korea, it is difficult for them to raise it, and they have to wait until the United States, cut rate. And contrary to our expectation, U.S. Federal Reserve is delaying their rate cut. So that's why we have Korean, Bank of Korea also has to delay our rate cut. That's why, 2 percentage point gap is maintained. I think the Bank of Korea will lower the rate as soon as the United States lower their, key rate.
Still waiting on the U.S. Federal Reserve's cue there then. Okay. Thank you very much, Professor Shin. We appreciate it. And we'll speak to you again next week.
Thank you.
If you're listening to our program using the podcast service, just a reminder that we do go live Monday through Friday, 7 a.m. Korea Standard Time. So tune in and help us make the show more informative by giving us your input. See you bright and early on Good Morning Seoul.